The West has a debt problem. It's speculative as to whether or not they actually hold the gold reserves they say, but the BRICS nations absolutely hold more gold than they did last year, 5 years ago, 10 years ago. They've been building their gold reserves higher. And the old saying, he who has the gold makes the rules, that's going to come into effect in 2025. 2024 is going to be a kindergarten party compared to what happens in 2025. 2025, again, I believe there's going to be a failure to deliver. Once that happens, who knows where the prices can go.
According to the Jerusalem Post, China has already unveiled plans to use a gold-backed yuan, and Russia is trading in currencies tied to gold. Together with the significant gold accumulation by BRICS countries, these actions suggest a world shifting away from dollar reliance. For example, the divergence between treasuries and gold as safe havens has signaled investors heightened uncertainty, given skyrocketing government debt and their preference for physical assets. Over the last 10 years, central bank purchases of gold have significantly outpaced purchases of US Treasuries. BillHolter is a well-regarded precious metals expert with extensive experience in the financial markets. Holter speculates whether countries like the US hold the gold reserves they claim. Meanwhile, BRICS nations have steadily increased their reserves, strengthening their global influence. For the last 2 years, the bloc has ferociously accumulated gold reserves. That was supposed to be for an alliance trade settlement currency. Based on market trends, Holter explains that while the U.S. dominates paper gold markets through the COMEX and dollar-based contracts, converting those positions into physical gold remains challenging. In the decades after President Richard Nixon abandoned the gold standard in 1971, the yellow metal fell out of favor with central banks, which hoarded their reserves in dollars instead. As of now, gold has seen a remarkable surge, rising by a third since late 2023 to nearly $2,750 per troy ounce. This increase has been driven by global factors such as war, inflation, and reckless fiscal policies, attracting both institutional investors and individual buyers. Furthermore, Holter anticipates 2025 to be far more volatile than 2024, predicting failures in physical gold delivery and a cascade of institutional collapses. Uncertainty around U.S. gold reserves and credit obligations makes gold's future value unpredictable. According to Gold Newsletter, gold prices are expected to soar in early 2025, driven by central bank purchases and the Fed's return to monetary expansion. The optimism exhibited by gold enthusiasts is noteworthy. Now, we present the clips of BillHolter's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
There's speculation, there's obviously speculation on the United States as to whether or not we hold the gold that we say we hold. There's speculation on other countries whether that their gold actually exists. I think there's very little speculation whether China or Russia or you could lump in India because they've been a big buyer. I mean, these countries, these central banks have been big buyers of gold now for 10, 15 years. And China has actually been grossly underreporting what they've bought. I mean, if you look at what has gone through Shanghai, and we know nothing's exported, so the gold goes into the country, but we know it never goes out. I mean, how many tons per year? You're looking at, 2,000, 3,000, 4,000 tons per year going in. It's not coming out. We also know that China produces 450 tons a year, which never comes out of the country. So the West has a debt problem. It's speculative as to whether or not they actually hold the gold reserves they say, but the BRICS nations absolutely hold more gold than they did last year, 5 years ago, 10 years ago. They've been building their gold reserves higher. He who has the gold makes the rules. That's going to come into effect in 2025. Gold does not exist to fill up the coffers. I mean, they would be competing with Russia. They'd be competing with India. They'd be competing with China. They're having a hard enough time keeping the price down without them buying. If they added buying, I mean, there's only so much. What is it? Call it 3,800 tons produced worldwide, and that's already spoken for. And silver's already in a huge deficit. So there's no way, they can print the money and they can They could buy contracts on gold or silver, but can they get those delivered? I don't think so. I think it's impossible. 2024 is going to be a kindergarten party compared to what happens in 2025. 2025, again, I believe there's going to be a failure to deliver. Once that happens, who knows where the prices can go? Forget about charts. You forget about everything. You're gonna, when all is said and done, count your net worth in ounces. And because it's a Western credit problem, and when credit breaks, you're going to see institution after institution fail in domino fashion. And I think the great taking will definitely be in place before the end of 2025. And like I said, people ask me, oh, well, give me a forecast. You can't forecast an Armageddon-like market, and you cannot do it mathematically either because, A, we don't know how much in dollar terms. A, we don't know how much gold the U.S. really has, and we don't know how much credit they're going to try to borrow, nor how much money supply they're going to print. So you don't have a numerator and you don't have a denominator. So you can't come up with a number. How much is each gold ounce worth that the U.S. government owns divided by the amount of credit that they owe? You can't do that math because you don't know the top or the bottom number for sure.
In the interview, BillHolter warns that global debt saturation has reached a critical point, with central banks and governments unable to take on more debt as they did in 2008. Unlike previous crises, no white knight is left to bail out the system, leaving the world vulnerable to economic collapse. The government has borrowed heavily in recent years to support the economy through the global pandemic and underwrite the agendas of Presidents Donald Trump and Joe Biden. Total debt outstanding has surged to $36 trillion from $19.5 trillion in 2016, or approximately 120% of gross domestic product from 105%. To make matters worse, spending continues to outstrip tax revenue far even though the economy has made a striking recovery from the COVID-19 emergency, causing the budget deficit to balloon to $1.83 trillion in the fiscal year ended September 30th. U.S. federal debt and budget deficits are at extreme levels, putting America toward financial ruin. While reflecting on fundamentals, Holter anticipates 2025 will be a critical year, citing the Bank of England's secrecy about non-bank bailouts. He suggests this could signal upcoming financial turmoil and potential bail-ins. Let's get back to the interview.
You could zero-bound interest rates again, and where were we in 2019, the end of the year, just before COVID hit? We were
something
on the we had come up a little bit off of zero, but we were still pretty close to zero bound. I mean, if you looked at short-term treasuries, they were half a percentage point. So it's not going to make a difference because by the end of 2029, we had a repo problem, and then all of a sudden, COVID came along and fixed it. COVID shut the real economy down. It lowered the demand for credit. It bailed them out, and it also allowed them to create trillions of dollars and spray those trillions all over the world like a fire hose. So that reflated. But here we are, actually back to where interest rates were 2008, 2009, before that crash. If you look at a chart, you'll see that interest rates never rebounded higher than the previous high until now. Now we're back to the previous high, but that had never happened from 1982 until 2008. Every peak was lower than the previous one for the next cutting cycle, blowing bubbles along the way. Bubbles would blow up, they'd lower interest rates, blow the bubbles up again. We're done with that. We've reached debt saturation worldwide. The difference between now and 2008 is that in 2008, there was still ability of sovereign treasuries and central banks to take on more debt. We've reached credit saturation, debt saturation. So there is sovereigns and central banks were the white knights in 2008. Who's the white knight now? Who's going to bail out the governments? Who's going to bail out the central banks? I think it all comes to a head in 2025. I think 2025 is the year And what bolsters that thought process is, I just posted this 3 or 4 days ago. The Bank of England announced that if they bail out any non-bank institutions, they're not going to say who they are. I mean, first off, why are they bailing out non-bank institutions? But if they're telling us they're not going to tell you who it is, that tells you 2025, because it begins January 1st, 2025. So it tells you this year they foresee something happening where they're not going to tell you who they're bailing out.
Why would they want to do that? What's the rationale behind it?
I don't know, not to not spill the beans on who's insolvent, so that they don't get put out of business. It did kind of surprise me, because the way I understand it, and I mean, just if you look at the great taking, there's not going to be bailouts, there's going to be bail-ins. So it very well may be that we have bail-ins of financial institutions, banks, and there may be bailouts of non-bank financial institutions. It's hard to say, but it's really curious that the Bank of England would come up with this as of January 1st, that they're not going to tell you who they're bailing out. And don't forget, I mean, go back to 2008, the Fed bailed out the world. They lent out, what, $16-17 trillion, and we didn't find out about that for 2 years.
While gold's path forward may be uneven, the broader economic landscape suggests that holding and selectively increasing positions could align with investor strategies in 2025. Given the growing reliance on gold by BRICS countries and the rising financial instability, how should investors prepare for potential disruptions in the global financial system in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.